And we will get going, finally. Thank you. I don't know what's going on. I know that this is not as drink. Maybe not. Sort of. Yeah, I don't know. Okay, so sorry for all of that, folks. Hopefully we'll get this figured out before the end of the semester. So as I said, today we're going to talk about overtime and minimum wage. We're going to start talking about minimum wage. I think we're all probably pretty familiar with what the minimum wage is, what the concept is of minimum wage, and probably a lot of you even know what the minimum wage amount is. Anybody tell me what the minimum wage is? Yeah, Ben. $7.25 an hour, exactly. So that is the current minimum wage. It has been at that level since, oh my gosh, 2000. Oh, I can't remember exactly how long, but at least a decade. So $7.25. This means, and this is the federal minimum wage. It doesn't work either. This is the federal minimum wage. There are state minimum wages as well, state minimum wage levels. If a state minimum wage is higher than the federal minimum wage, then that is going to be the minimum wage for everybody within that state. If it is lower, and there are minimum wage rates at the state level that are lower than the federal minimum wage, then the federal minimum wage is what prevails. So it's going to be at least $7.25 an hour. Now you will, as we get into this discussion, we will talk about certain exceptions to that $7.25 an hour, because there are certain exceptions to that. They're very specific. But for the most part, $7.25. Now that $7.25 applies to non-exempt employees. So those employees who are not exempt from the provisions, the wage and overtime provisions of the FLSA. If an employee is exempt from those provisions, then the $7.25 an hour doesn't apply. There's a separate minimum wage, it's actually a minimum salary, for individuals who are exempt from the FLSA, from the wage and hour provisions of the FLSA. So this is for non-exempt employees. For exempt, it's a minimum, and this is per hour, $684 per week. So it's more like a minimum salary amount for those employees who are exempt. And we'll talk a little bit about who is exempt and who isn't exempt as well. We'll get that definition down. So, but let's talk about the hourly minimum wage at this point for those non-exempt employees. And what is included in that $7.25 an hour? When we're figuring out if an employee has met that $7.25 an hour minimum amount, we can include all of this. So wages, hourly wages, as well as at times there are salaried individuals who are non-exempt. So we normally think of exempt individuals as those who are salaried, but the two are not necessarily synonymous. They're not necessarily the same thing. So if an individual is salaried, but they are non-exempt, we might have to do some calculations to make sure that they are receiving that $7.25 an hour. Commissions can be included in the calculation as well. Certain bonuses also can be included in the calculation. There are a couple of different types of bonuses. Some of them aren't included, some of them are included. We'll talk about those as well. Tips. This is where we're going to run into one of those exceptions to the $7.25 an hour. Now, it's an exception in that the employer doesn't have to pay $7.25 an hour, but the employee has to earn $7.25 an hour minimum wage. What does that mean? That means that that $7.25 is coming from two different sources. It's coming from the employer and it's coming from tips. And together, combined, it has to equal $7.25 an hour. Reasonable cost of room, board, other facilities provided by the employer for the employee's benefit. That can also be included in the calculation to make sure that the employee is receiving that $7.25 an hour. I'm sorry, I'm going through this fast now because I'm low on time. All right, so lodging and board. So there are circumstances under which employees might receive lodging, room and board from their employer. Think about, I mean, I don't know how often this happens, but hotel employees. If there's a hotel employee and they are asked by the employer to live on the premises so that they can manage the hotel and be available at all times, then that lodging, if it's regularly provided by the employer, the employee voluntarily accepts the lodging. It is furnished in compliance with applicable federal, state, local law. It is provided for the benefit. Now, this is where the distinction is. So if it's provided for the benefit of the employee, so there is no requirement for them to live there, then that benefit can be included, the value of that benefit can be included as their wages to meet that $7.25 an hour, which means that if the value of that, so let's think of a scenario. We've got an employee who is not required to live on the premises, but the employer is providing them that benefit. Employer hasn't asked them to do this. They just, maybe they don't have any other place to live, and so they've asked, hey, can I live here at the hotel? It's a lot easier for me. Okay, fine. So it's for the benefit of the employee. If the value of that, those living arrangements over the course of the week is the same as, they worked 40 hours, $7.25 an hour is $290. If the value of that per week is $290, then that $7.25 an hour has been met. Okay, so they don't, the employer actually wouldn't even have to pay them additional in cash for that time. If it's for the employee's benefit, if it's for the employer's benefit, the employer has asked them to live on the premises, then that $290, that the lodging would not be included in the calculation. Yeah.
Would there be any sort of like income taxes or like how does that work?
So there would,
assuming it's all provided by the room.
It's still taxable. It's still considered income for tax purposes, because think about it. If the employee had earned or had received $290 and then turned around and just used that for room and board, that $290 that they had earned would be taxable, right? It wouldn't, so it doesn't change the nature of that. Yes, it would be taxable. I doubt that there are very many circumstances out there where an employee is earning all of their wages through receiving room and board, but there might be. In those cases, withholding is pretty difficult because you don't actually have any cash. But at the same time, if the wages are only the $7.25 an hour, $290 a week, chances are they're not going to owe any income taxes anyway, just because their wages are low enough that their standard deduction will eliminate any taxable income for them. So in practical terms, they probably wouldn't owe any tax anyway. But long and the short of it is it all has to do with it. The difference is whether or not it benefits the employee or if it benefits the employer. So if it benefits the employee, The value can be included for purposes of calculating, making sure that they're earning that $7.25 an hour. Also, the employer has to maintain accurate records of the costs in furnishing the lodging. Something like a hotel would be pretty easy because they have a standard nightly rate. Now, $290, most hotels, you'd probably go through that in 2 days, and some of them in 1 day, right? But the records have to be, they have to maintain good records. All right. We'll go through some of these deductions. So deductions from pay, if the items are primarily for the benefit or the convenience of the employer cannot deduct the cost of those items from the pay. Think about, I don't know, uniforms or things of that nature. If the employer is requiring you to have a uniform, you have to wear that uniform. The employer cannot then deduct the cost of that uniform from the employee's pay, okay? And the deduction cannot reduce their pay down below the minimum wage amount, okay? Let's see, so some illegal deductions: tools, damages to property, cash register shortages. So if your employee steals from you, you cannot then turn around and take that amount out of their pay. I had a client who, they were a tax client, and they were terminating an employee. She was their bookkeeper, and they had the relationship had gone sour. And so they were terminating her. And upon her termination, she changed all the passwords and locked the owners of the business out of all of their accounts. So she sabotaged them, right? So they had to hire somebody to come in and get into their systems, and they had to pay that person. And they asked me, can we charge her for that? No. Can we withhold her last pay because of that? No, you can't. You're just out of luck. That's one of the costs of having employees, is you take that risk. Now, of course, I mean, she was in the process of being terminated anyway, but in any of these cases, you know, if there are damages or if tools go missing or something like that, the recourse that the employer has is to terminate the employee or some sort of disciplinary action, but they cannot withhold wages as a result of that, okay? All right, so let's look at this exercise here in order to calculate the minimum wage. So this is an example of uniforms that are being deducted. So if this individual makes $8 an hour, and they usually work 30 hours a week. Now, $8 an hour, obviously, that's above the minimum wage. So just with the wage, they're fine. But the employer is requiring a uniform, and they're deducting that $30 for the cost of the uniform. Well, what happens there is it ends up bringing them below the minimum wage. So the calculation for that, we take the $8 an hour times the 30 hours. So normally they'd be making $240. Subtract that $30. Now they're down to $210. But the minimum wage is $7.25 an hour times 30 hours is $217.50. So this brings them down below that minimum wage amount. They would not be able to do that, right? They wouldn't be able to, and it's the employer required uniform. My understanding is they wouldn't even be able to do that because it's being required by the employer. All right. Questions so far? Sorry, I'm going through this really fast. I'm going to try and get through. Okay, so tipped employees. Tips, or any questions out there as well? Sorry, the camera's over here now. Let me make sure. I think I see maybe somebody said something.
I'm okay.
Okay.
I'm with you.
Okay, cool. Okay, so $7.25 an hour is generally the minimum wage, but for tipped employees, like I said, it's as though the income is coming from two different sources, right? So we've got happy with this room, just in general. The board is, ugh. All right, so the tipped employee still has to make $7.25 an hour overall, but it comes from two different sources. One source is from the employer. I'll use the abbreviation ER, employer. And generally speaking, that's going to be $2.13 an hour. The second source is from tips. And as long as those tips average out to at least $5, what are we doing here? $5.12 an hour, then the employer does not have to pay any more than the $2.13. Okay? But if those tips fall below, and this is on average over the course of the week, fall below $5.12 an hour, then the employer is going to have to make up the difference. This amount here is called the tip credit. Now, it's a credit for the employer, not for the employee. Essentially, what's happening with the tips is it's subsidizing the wages of the employee. So the employer now has the benefit of paying a lower rate of pay to the employee. So when you go out to dinner and you tip somebody, which please do, that's how they survive. That's what they're depending on. But when you do that, you are subsidizing the wages for the employer, essentially. It means the employer can pay a lower rate of a lower hourly rate to that employee. Now, right now, I don't know how many employers are actually paying only the $2.13 an hour. A lot of employers, because there is a shortage of workers, have been forced to increase that amount. Maybe they're paying minimum wage plus tips. Maybe they're paying $10 an hour plus tips. But this is going to be the minimum amount that they can pay to employees. So let's look. And so what is a tipped employee? This is somebody who regularly receives more than $30 a month in tips. That's not a very big amount, right? I mean, you think about coffee, baristas and stuff, when you just get $1 here, $1 there. If that adds up to regularly over $30 a month, then they are considered to be tipped employees, and these rules would apply. Now, one other thing that I want to point out is, again, states may have different minimum wage for tipped employees. They cannot have a minimum wage that's lower than the $2.13, but they can have minimum wage that's higher than the $2.13 an hour. So Iowa does not. Iowa follows the federal for both the regular $7.25 an hour and for tipped employees. I think every state around Iowa, I'm pretty sure, has a higher minimum wage, but Iowa has maintained just the federal amount. So yeah.
What if the tip is included in the price?
What if it's included? So it's like automatically applied? That would still count toward the $5.12 an hour. Yeah. Just because it's automatically applied doesn't mean that, So even if it's voluntary or involuntary, that the gratuity that's sometimes for larger parties and stuff like that. Okay. Now, the employee does have to be informed of this. I mean, obviously, most employees are informed of what their wages are before they start a job, but they do have to be informed by that. The employer has to document that sufficient tips were received in order to bring that wage up to the $7.25 an hour. Tips retained by the employee, not those shared with the employer or other employees, except in valid tip pooling arrangements. Sometimes you've got everybody, all the tips go into one big pile and then it's divvied up at the end of the evening. That happens sometimes. It's however much the employee themselves actually receives is what is included in calculating those tips. So let's see here. I want to move over because I think I've got some examples. Close. Okay. I think. Okay, so here's an example that we can look at. Okay, so we've got an employee. It's too tiny. Okay. So we've got an employee who worked 40 hours a week. They reported tips of $43 for the entire week. So we can probably pretty much tell that $43 is not going to be enough to get them up to the minimum wage. If they worked 40 hours during a week, so 40 hours times 725 is $290. So this would be the minimum amount that they would have to earn during that week. They earned $43 in tips. So if we were to, no, I guess we'll do it how they're doing it. For the employer's portion, 40 hours times 213 is 85.20? $85.20. So in tips, the minimum amount of tips that they should receive for the week in order to get them up to that 290 is going to be the difference between these two. So 80, what are we doing here? 205.80 is how much is the minimum amount of tips that they should have received in order to get them up to the minimum wage. They didn't receive that amount of tips. They received $43 in tips. So the employer is going to have to pay them, have to make up the difference, right? In order to get them up to that $290 for the week. Now the second scenario here, they had reported tips of $1,189. Well, that's obviously well over the $290 minimum. So the tips alone got them up to the minimum wage, but the employer is still going to have to pay them $85.20. The $2.13 times 40 hours. The employer is always required to pay them at least that amount, even though, like I said, their tips were sufficient to get them well over the minimum wage amount. Questions? No? All right. So you had mentioned, so the mandatory gratuities are a little bit different than service charges. Service charges are not considered to be tips. They're considered to be service charges. So bottle service charges or room service charges are not included in that amount. A lot of times I think those probably don't even go to the employee anyway. The tip is a separate matter. So if the employee performs more than one job, which oftentimes happens in restaurants, right? Maybe you're a server for a couple of nights and then you need to fill in as the host for a night. Well, normally a host doesn't receive tips, but a server does receive tips. So the tip credit, this amount, can only be applied to the job that is tipped employment. So only to the server's wages. So in that case, the employer is going to have to pay at least the $7.25 an hour for the job with the hosting job. Yeah.
Okay, so the tips, so like if there's like a group of like 5 to 6, and then there's like an 18% charge, right?
Mm-hmm.
And do you count that towards tips or service charge?
That if it's a group and it's going to the employee as a tip, that is counted as tips. Yeah. Yeah. Like I said, I think a lot of these service charges they're not tips. oftentimes they don't go to the employee. They're just additional charges that, nickel and diming you. Okay. Other questions? I know I'm zooming through it. Let's see. I want to go back to this other one. Okay, so minimum wage. What do we consider hours worked? So an employee has to be paid for all of the time that is considered to be hours worked. If the employee is waiting to work, but they cannot leave the premises. So think about, okay, you're even an office job, the computer goes down, this fiasco here, where we're waiting to work, but can't really leave, right? We just have to wait and see if we can get this fixed. That has to be paid time. The employer cannot clock the employee out if the employer is mandating that the employees stay on the premises. This has been a problem actually for a lot of employers, even big employers, that will automatically clock employees out, but they still mandate that they stay and do extra work. I think Walmart has been fined for this, clocking employees out, but they still have to stay and maybe do cleanup afterwards, like after does Walmart close? After the store closes. They cannot, the employer is not allowed to do that. That
Sonic
is a
also
violation.
did that too.
Sonic did that too?
Mm-hmm.
Yeah.
Yep.
There are a lot of employers that really, they should know better. These are not small places. They should have entire human resources departments, and they've got lawyers on staff that can tell them, no, you can't do that. But still, there are a lot of employers that have done that, had that violation in the past. On call. So if an employee is on call, if they are on call at the premises, and then the employer mandates that even if they're on their phone or they're doing something else, but the employer says, no, you got to stay here. That time has to be paid. If they're on call, but they're free to go, they just have to, if they get called, they have to come back and do work. Then that time does not have to be paid. Now, a lot of employers will give some sort of supplement in those conditions, in those circumstances anyway, simply because, even though the employee is off the premises, they're still kind of limited in what they can do, right? They can't go off on vacation or anything like that. But there is no requirement that they be paid if they're allowed to go, but they're still just on call. Training time, that also has to be paid. So if you are just starting a job and you're going through an orientation or you're getting trained on specific software, that is time that has to be paid for, even if it's not occurring at the work site. So they send you off somewhere else to get that training. That still has to be paid time. Traveling during your work hours. So if let's say you're a bookkeeper and you've got lots of clients around town and you've got to drive to those different clients, that time that you spend driving between while it's within the workday is considered work time, and you would have to be paid for that time. Now, the time that it takes you to get from home to your work site, that is commuting, and that is not time that has to be paid. And at the end of the day, when you're going back home as well, or if in the middle of the day you go home for lunch, that's commuting, that does not have to be paid. You're off the clock at that point. Sleep time. If you work a shift that is at least 24 hours, and there are some occupations that do require that. Doctors have ridiculous requirements sometimes. Pilots, bus drivers, you are required to be paid for a minimum of 5 hours of sleep time if you work for 24 hours or more. Firefighters as well, as Lisa points out. Yep. So that has to be paid time. So getting paid to sleep. I know some people do that on the job all the time anyway, but if you do have to be paid if it's over 24 hours. Work that's not requested but suffered or permitted is work time. What the heck does that mean? That means if the employee chooses to work, even though they're not scheduled to work, even though there's no requirement that they come in and work, they still have to be paid for that time. Think about like the employee who, again, bookkeeper, and you've got end of the month reconciliations and you didn't get them finished. So you bring the work home. That time at home is considered work time and you have to be paid for it. Even answering emails is considered work time. Now, if the employer doesn't want you to do that, they can respond to that by imposing some sanctions. They could discipline the employee as a result of that, but they still have to pay them for the time. Employee could be terminated, so then they won't do it again, but they would still have to be paid for that time working. Let's see. We already kind of went through that. Rest and meal periods. So short rest breaks of 20 minutes or less, I think one of our videos went through this, do have to be paid. So, but meal periods do not have to be paid for. The employer does not have to be paid for that time unless they are required to do work during that time. And we did in that video, I think we went through some of that. All right, so we went through training time, we went through travel time, we went through sleep time. So here's your suffered or permitted working off the clock. Minimum wage, okay, so common violations. Illegal deductions, minimum wage not paid, so if they deduct for items that they're not allowed to deduct for, or the deduction brings the employee down below the minimum wage. Tipped employees, so if the tips are not retained by the employees, the employer takes the tips. Employer cannot do that. The tipped amounts belong to the employees. When I was in college, I worked at a restaurant actually here in Des Moines, and the employer was he was pretty. It was a local restaurant, and the employer was pretty lax about a lot of things, but he was pretty lax about paying his employees as well. Didn't have a set payday. In order to get that $2, and it was $2.13 an hour back then too. In order to get that, you had to go in and request it from him, and oftentimes, oh, my check, I don't have my checkbook on me. Come back tomorrow, that sort of thing. Also, he had a habit of stealing tips, and he would do this by not the cash tips that were left on the table. That was easy enough for the server to pick up. But if a customer left a tip on a check, this was back in the days when people wrote checks, he wouldn't count that as a tip. He would just put it in the till, or on a credit card. This was back in the day when you would run through the register, or you wouldn't, like, it wasn't electronic. You just kind of do the swipe thing. He would fail to include that in the tips. And so all of us servers, now we liked working there. We were all friends, and the tips were actually pretty good. So we put up with that stuff, but we got into the habit of keeping track of every single bill, every single ticket that we wrote up, and totaling it and estimating what we thought probably should have been our tips for the night, so that we could go back and justify it. But terrible violation. Of course, like I said, it was just a mom and pop place. And times were a little bit different back then as well, but there were a lot of violations they weren't just tipping violations either. I think there were some health code violations probably. Hours worked, so if hours were worked, even if they are not permitted, they have to be paid. So that's another common violation. And as we had mentioned, forcing employees to work off the clock is another big one. Okay, let me see here. Okay, tips, minimum wage, questions? No? Pretty clear? Okay. All right, how about out there? Any questions? You're over here. Okay. Let's see. I noticed you guys couldn't really see that very well. Maybe that's better. I'm trying to get it so you can see both. All right. Now we're going to talk about overtime. Again, overtime, being paid an additional premium amount for overtime only applies to non-exempt workers. So if an employee is exempt from the provisions of the wage and overtime provisions of the FLSA, then they are not required to be paid for a premium rate for hours over 40. Oh. That's hard to erase. Okay, so what is, I think, most of us are aware that overtime is 1.5 times our regular rate of pay. So easy calculation here. If our regular rate of pay is $10 an hour for regular, multiply that by 1.5, our overtime rate is $15 an hour, right? That's a pretty easy calculation. This is, for the most part, this is for hours over 40 hours in a week. Now, there are a couple of exceptions to that pertain to hospital workers and workers in residential care facilities. Okay, they've got a different rule that they can apply, which we'll talk about here in a minute. So 40 hours during a 7-day period. Doesn't matter what those 7 days are. Most of us think of it as starting on Sunday, ending on Saturday. So like Sunday at midnight to Saturday at 11:59 p.m. A lot of employers use that, but they don't have to. They can use a different week as long as it's 7 consecutive days, 168 hours in a row. So we could start Wednesday at midnight and go to Tuesday at 11:59. That's fine. You can do that. It's important that the employer maintain a regular schedule, though. Don't go changing it up. Choose a week that you want to use and stick with it. But during that period, if the employee who is eligible for overtime, so the non-exempt employee works over 40 hours, then they have to be paid 1.5 times their regular rate of pay for those hours over 40. The first 40 hours are still going to be at their regular rate, right? It's just those hours over 40 that are going to be at the overtime. Now, I don't know if there are any states that have a different overtime rate, but some employers will offer a different overtime rate. Maybe they'll say, you know what, we'll give you 2 times your regular rate of pay for working overtime. That's fine, as long as that minimum is met. Employers are free to be more generous. States and local governments are free to be more generous. They just cannot go below this 1.5 times over 40 hours in a week. Some employers offer, bonus pay if you work holidays. That's fine. There's no requirement to do it, but employers can go above and beyond. That's not an issue. Let's see. Where are we? I don't know if that's real or if it's coming from the kind of sounds like a baby crying. All right, so I said that there is an exception to that for hospital employees. Hospital employees have funny schedules. If you know any nurses or medical professionals that work in hospitals, they might work like 3 12-hour shifts and then have a couple days off. And then they'll start working again another 3 shifts, 3 days on, 2 days off, 3 days on, 2 days off, that sort of thing. Which means that there's a very real possibility that, if they work 3 12-hour shifts, Sunday, Monday, Tuesday, and then work again on Friday and Saturday 12-hour shifts, now they're into overtime because it's within that 7-day period. So some weeks would be overtime, some weeks wouldn't be overtime. So they have some special rules that they can follow. Overtime starts to kick in for 80 or more hours in a 14-day period, or 8 hours in any work day, whichever results in the greatest amount of overtime. Okay, so that's the rule that hospitals have to abide by. So they're not looking at this, well, they'd be still looking at, a start date and an end date, but it wouldn't be Sunday to Saturday, it would be Sunday to the next Saturday, right, at that 2-week period. If then within that 2-week period, if it's 80 hours or more, or if on any one of those days they worked more than 8 hours, then they would get paid overtime. So whichever results in the greatest amount for the employee is what would apply. Again, that's only for hospitals. Retail and service industry employees have some special rules as well. We're not going to get into that too much. Employees receiving remedial education also have some different overtime rules. Now, again, I think we mentioned this, employers can force you to work overtime, and they can fire you if you refuse to work overtime, but they have to pay you for that time, right? Comp time. If any of you have heard of comp time, comp time actually is, it's only mandated for public sector employees. So, and there are two separate sets of rules for public sector employees that are in public safety and those who are not. So, any state or political subdivision, so states, counties, cities, all of that stuff, can grant comp time. Employees in public safety, so EMTs, firefighters, police officers, that sort of thing, or seasonal activities can accumulate 320 hours of comp time. Now that comp time has to be 1.5 times their regular time. So for example, if you work 41 hours in 1 week and you choose not to be paid overtime for that additional hour, then you get 1.5 hours of time off in another period. Now for private sector employers, they can do this, but it has to be in the same pay period. Public sector employees get to carry their comp time over. So for those in, those in public safety, they can accumulate up to, 320 hours of time, but times 1.5, that's 480 hours of actual comp time. If they're not in public safety, then 160 hours, or total 240 hours that they get to take. That's in lieu of overtime. So they don't get paid the extra, they just get time and a half off at some point in the future, right? If they leave and haven't used their comp time, the employer has to pay them for that, right? Because they would have paid them if they'd chosen to take the overtime pay in the first place. So you don't just automatically lose it because you decide to take the 1.5 times time rather than the 1.5 times your pay rate. All right, so a questions about any of those items?
So
Yeah.
that, I'm sorry.
No, go ahead. And
For that, you don't have to, since it's like PTO, you have to accumulate time
mm-hmm,
every certain amount of time you work or pay period.
mm-hmm.
If you do time, like if you do overtime, that's like goes directly as like overtime, like let's say you work an extra 8 hours, like that's a whole day of.
So it would be, so if you work an extra 8 hours in a week, say you worked on a Saturday. So you work Monday through Friday normally 8 hours, and then you came in on a Saturday and also worked 8 hours. So now you've got 48 hours. 8 hours of that is overtime. You could get paid 1.5 times your regular rate for that overtime. Or you could choose to carry over those 8 hours as comp time, but you wouldn't get 8 hours, you get 12 hours, 1.5 times those 8 hours. And if you're a public sector employee, you can carry that over to a different pay period. If you're a private employee, there's no requirement that be carried over to another pay period. Does that make sense? Did that answer your question? Okay.
For me, I have a question for a day, because in the public, nobody can work Sunday and Saturday. Everybody work Monday to Friday.
Mm-hmm.
And then you have no law, specific law for the private. Somebody can work Monday to Sunday. For me, it's not, I don't understand this one. Because it's discrimination, because the public work only 5 days in a week. The private work only the 7 days.
Well, in public employees might work more than just the 5 days. It's entirely possible that there are, because public employees are, they're attorney general's office are public employees. Those who work at the Department of Transportation are public employees. Police officers are public employees. School teachers are public employees. It's a very broad definition. It's a very broad selection of positions that encompass the public employees. So it's not just limited to Monday through Friday. Now, a lot of those public, like the public offices, are only open those hours, Monday through Friday. But if you're an employee and you've got work to do, you might have to work into Saturday or Sunday. Does that?
Because if you stay in public and then you work Saturday and Sunday, this one is overtime or regular time?
If you are entitled, if you are paid on an hourly basis, then yes, just because it's Saturday and Sunday, no. Only if you work on Saturday and Sunday and it's over 40 hours total in that week. So, like if you worked Wednesday through Sunday and you worked 40 hours, that's still 40 hours. It's not more than 40 hours. So even though you worked on Saturday and Sunday, you don't have to get paid overtime for that. Is that help? Okay. All right. Let's see here. Okay. So everything that we've been talking about with regard to minimum wage and overtime applies to those non-exempt employees. So what the heck is an exempt employee? Like I said, we usually think of exempt employees as salaried, but that's not an exclusive definition. Exempt employees, what we mean by that is that they are exempt from the overtime and minimum wage provisions of the FLSA. But as we mentioned earlier, there is actually a minimum salary that they have to receive. And it's that $684, $684 a week. And it has to be paid on a salary basis. That means that if they worked 20 hours a week, they get paid at least $684. If they worked 70 hours in a week, they get paid at least 684 hours. It is not, it's more based on the job than it is on the time that is committed to that job, right? So there are specific rules for who is classified as exempt and who is classified as non-exempt. The employee doesn't choose, the employer doesn't choose. It has to do with what the job is. And we're going to look at those different classifications here in the next slide. There are certain workers, like manual workers, blue collar workers, that are always entitled to overtime pay, including police officers, emergency medical technicians, firefighters, paramedics, LPNs. So there are certain classifications of employees who automatically would get paid, even if they're on a salary basis. If they work overtime, they automatically get paid for that overtime. So those classifications of employment that would be considered exempt. Executives. So if their primary duty is managing and they supervise 2 or more employees, and they have the authority to hire, fire, promote others, they are considered exempt from the overtime and minimum wage provisions of the FLSA. Administrative, so office work. If they regularly use their discretion and independent judgment. So if they are micromanaged, it's office work, but they're micromanaged, they really don't have the ability, it's just kind of data entry maybe, that sort of thing, then they wouldn't necessarily meet that administrative criteria. But if you are an accountant, a payroll clerk, you're using your judgment to make decisions about, okay, well, how are we supposed to pay this person? How are we, how are we going to implement this change? That would be using discretion and independent judgment, and therefore would be exempt. Professionals, these are individuals whose work requires advanced knowledge in science or learning. So think teachers, lawyers, doctors, architects, accountants, that sort of classification. You need some sort of specialized knowledge. The knowledge is acquired by prolonged course of instruction. You can see these are kind of broad definitions, because what is prolonged? My definition of prolonged might be different from your definition of prolonged. But so professionals, business owners. Business owners are exempt from everything. A lot of times they don't even get paid, right, Kathy? They're the last ones to get paid. So if they own at least 20% of the equity in the company and they actively manage the business operations, then they are considered exempt. Highly compensated employees, so earning more than 107,432. I have no idea where that's a very specific number. I have no idea where that comes from. Non-manual work, regularly performs one of the exempt duties of an executive, professional, or administrative employee. So even then, they would pretty much fall under one of those categories anyway. Computer professionals. Our friend, gosh, I should know his name off the top of my head. We've become, what's that? Yeah, we've become such good friends. Computer professionals, they have to have a salary of at least $684 a week, or they can get paid on an hourly basis, $27.63. So system analysis, tech, all that stuff, you know what that is. Creative professionals that require invention, imagination, originality, or talent in an artistic or a creative endeavor. Actors and actresses, artists that paint, they would be exempt. Usually artists are kind of independent contractors themselves. They're making their stuff and selling it. Outside salespeople. Key here is outside. So when we talk about outside salespeople, we're talking about an individual who is, they don't have an office inside the business. They're always out traveling. Right, so that's an outside salesperson. If their primary duty is making sales, obtaining orders for services, or use of facilities, they're regularly away from the place of business, then they are exempt, and there's actually no minimum that they have to be paid. They could get paid zero for outside salespeople. They're kind of on their own, right? But these are, anybody who fits into one of these categories is automatically considered exempt, and that $7.25 an hour doesn't apply, but the $684 a week applies. But, you know, if you think about it, $684, you could work 100 hours in a week. I got pretty close to working 100 hours in a week when I was doing taxes. That would be $6.84 an hour. So that can bring, depending upon how many hours they work, they could actually be making less on an hourly basis than that $7.25, right? In reality, most don't. They make more than that. Not many people work 100 hours a week, but it's entirely possible. But they could work 100 hours one week and 10 hours the next week. They're still going to get paid the same amount. They don't get any overtime for hours over 40 a week. Let's see, questions about that? Let me see if this other slide, I know we're just about out of time. If there's anything here that we didn't already cover with regard to overtime.
Question.
Mm-hmm.
Are you an exempt or not exempt?
Me?
Yeah.
I'm exempt.
Okay. So you earn more than that 107, that specific number.
Well, I'm a teacher.
Okay.
Yeah.
Indirectly.
I'm trying to figure out how much I get paid. I'm probably, well,
The highly compensated.
well, no, I wouldn't call it that. Probably the professional. Knowledge acquired by, because we all have to have at least a master's degree. So that's our advanced knowledge. Let's see here. Regular rates. Okay, so we will get into on Thursday, we'll get into some calculations on some of this stuff. So we've got the background there. We'll get into some calculations of that and start talking a little bit about other types of compensation plans as well. So be prepared to bring your calculators with you so you can help me so that I'm not constantly up here trying to figure it out. Okay? Thank you for putting up with all of this. It's frustrating for me. But hopefully we can get it all sorted out. It's funny because I've used this before with other classes. I'm just back to using my old way. All right, everybody out there. So anybody have any questions? Sorry, the camera's back here now. Anybody have any questions? Nope. Okay, excellent. We will see you on Thursday. Thank you. Hopefully we'll be able to start on time. It'd be nice. See ya.